Hey, good morning, everybody. Good morning, good morning, good morning. Whew, FOMC day. What a interesting day. Good morning. Morning, Maurizio, Alan, Angie, Patrick, Mahalo, Everett, Aaron, Gregory, Larry, Ben. Oh, that's Ben twice. Ha. Jan, Rongamer, Jason, Cliff, Craig, Alan, Andreas, Harry. Good morning. If you want to chat with me like all these fine people, right here. That little green square, click that button, subscribe to the channel, turns the live chat on while I'm live. And morning, Jason. Morning, Kevin, Nikki. Good morning, everybody. I love the crowd, love the participation. And remember, you can ask questions. Sledge, the Netflix thing. Let's talk about that in the VIP chat. I'll look at that over there. Hey, Chris. Yeah, happy birthday to Kimberly. It is the boss's birthday. Happy birthday to her. She may or may not actually be in here today, so we'll see. She's got a fun-filled day planned. Michael, Jaquise, Sergio, good morning. Good morning. Yes, it is Kimberly's birthday, so happy birthday to the boss. Dan, hey. So yeah, make sure you hit the bell down below the video with the doodads, the little alert things. Turn on all notifications so you know when I go live. I was debating. I mean, I know that everybody loves me to go live, but I was debating maybe I should go live during the FOMC. I don't know. The last couple were duds, so let's talk about that here. And yeah, happy birthday to the boss. Yeah, Craig, Kevin, Space Cowboy. Yeah, morning everybody. All right, I don't even know if she's on the stream. It doesn't look like it so far, but let's kick it off over here. Remember, all trading involves a substantial risk of loss. I'm more of a trader than an investor, and past performance not necessarily indicative of future results. I may never get another one of these things right again, although the track record shows that I kind of got a little leg up on these predictions. Anyway, this presentation here, informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything, financial instrument or otherwise. If you desire that personal financial advice, you got to hire a consultant financial advisor. Remember, most people out there making YouTube videos are full of bularkey, completely full of crap. Be careful who you pay attention to. Even the mainstream media, mostly full of crap. In fact, a lot of them get paid to do the stories. I mean, it's just ridiculous. The more and more I dig into this industry, the more full of crooks and crooked people. So I rely on your support. That's why links in the description. It's like $5 to come join me in Discord to keep doing what I do. So thanks for watching. If you watch the ads, it helps me a little bit too. So, I mean, this whole thing, it does take money for me to keep doing what I'm doing. Support Kimberly and her birthday, All right, moving on. So, we have FOMC today. Dun, 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 2 p.m. If that's not on your, if you're a trader, it's not on your phone calendar, not on your phone alert, you might set something for like 1:50 p.m. Eastern time because this baby is coming out today. We're going to have, likely to have some volatility. At the end of the day, we may or may not actually have volatility. So we'll talk about that here in just a moment. But 2 p.m. and then Jerome Powell cannot resist talking at 2:30. And that's why it was the thumbnail for the day. Jerome Powell with the monsters behind him. We don't know what he's going to do. I mean, the estimates are for no change. I think the market's pricing in no change. So if they stick with no change, the reaction is going to be muted. Now, the thing that's going to cause a reaction is the dot plots. How are the individual members of the FOMC positioning themselves in the future? Do they expect that we're going to have to raise rates? Do they expect we're going to cut rates? Do they expect we're just coming in line? That's the big takeaway here today, more than likely. All right, that'll have more effect than anything else. Now, let's circle back around. I was kind of speculating on Monday, Tuesday that we might see a pop into FOMC. Well, this is what I was showing off yesterday, and we ended up doing the drop right down here to the 44.70 and held that. I kind of threw that out there as like it might happen. You know what? We bounced right off of it. And that gives me caution. I was talking about that on the 30 Minutes of Awesome last night at 5 p.m. This kind of tilts the odds that we see a pop since we got a drop into this and made a bottom and a very swift recovery, it has a running flat in it. I'll go through that on the ES chart live here in just a minute, but we kind of have a running flat in there, which is kind of bullish. I mean, it's kind of like really bullish. So it is a little bit of a coin flip since we're above 4,400 on the S&P. You know, this is the futures. Since we're above 4,400 on the S&P and we're below this high from a couple days back, Monday, that's kind of put us in a coin flip zone. Just hanging out right in there. Now, if we break out, that's kind of an indication that we're going higher. If we break down, we could go lower. So there's the possibility that we go higher, we go lower, or the possibility we just end up flat. All right. Now, I brought in some other stuff to talk about, you know, my big bullish expectation for this whole year so far. This is zooming out to a 3-day chart. I've been kind of bullish, and I think we're going to continue bullish probably into next year. This little correction may or may not play out any further. We may just launch on off to this 3 up here around 48.83. We'll probably experience a pullback after that point sometime early next year, maybe. Head back down into the area we are now, 44.30, you know, possibly only 4,600. And then we'll probably make the move, this final move up to 5,300. Probably it could take us out into 2025 even. So that would be, hey, there she is. There's the birthday girl. So big picture, you know, definitely pay attention to where you are. Are you in the big picture? Are you trading for the big picture? Or are you trading for what's going to happen today, tomorrow, next week? You got to have time frame in mind. All right. Very much a time frame game. Now, I brought S&P 500 index seasonality. Typically in September, we see a pop and then we see a drop. Well, so far, where's the pop? I mean, we kind of got a little run off the August lows, but we didn't really get a pop. So is this going to be the pop? I don't know. Very well, that could be. Usually we kind of see a September drop on FOMC. You know, that options expiration, FOMC, we tend to drop into the end of the month, make a bottom here going into early October, and then rally to the end of the year. We see that on the S&P. We see that on NASDAQ. Both of these are 20-year cumulative gains right here. You know, we tend to see that pop and drop in September. All right. I was kind of biased for a drop, but right now price action is kind of saying that we may already be done with this drop and we may just start the run. That doesn't mean there won't be pullbacks and volatility along the way, but looks like things are kind of, you got to adjust. Like, that's how I wrapped it up yesterday. You got to adjust when you're presented with new information. The new information was we dropped out yesterday, made a bottom, and swiftly recovered. I'm cautious, all right? Now, VIX seasonality. I'll zoom this back to where we can actually see it here. September, we tend to experience a low, and then we get a pop into October, historically. Now, VIX is behaving a little different this year. It's kind of in line with this, but it's a little different because we've had 0 days introduced. You know, this is a 20-year average. 0 days have only been around for a short period inside this 20-year time. A lot of what used to be S&P 500 monthly contracts traded have switched to 0 days. In fact, some 70 to 80% of the volume on S&P 500 contracts has switched to 0-day options. And it's not retailers. It's the big guys playing. And I mean, at some point we may have 0-day Armageddon, but right now we don't. But what that's doing is people that used to play the monthlies, you know, this VIX is derived from the monthlies. The monthly front month options contracts and the volatility. So if they're not playing front months, they're just playing dailies, then VIX doesn't have that volume reflected in it. So it's kind of leaving the front wide open. It's kind of like leaving you're worried about locking up your house, but you're leaving the gate wide open out front. I mean, be careful. I mean, the zombie horde could come in. All right. Here is an interesting chart. This is FOMC days, going back to 2 years-ish. The implied move based on the options, and then the move we got. Now I want to focus in on the last 3 here. We were expecting a 9.5. We got a 0.7. Lower volatility than we expected. June, we expected a 0.8. We got almost flat. It was a dud at the end of the day. July. Everybody kind of remembers that one, right? It was a complete dud. I mean, pretty much didn't move at all at the end of the day. Now we've got a 0.67 priced in. When's the last time we had a 0.67 priced in? All the way back here. And we got a 0.65. Be careful, all right? We may get another dud. We kind of all know what we're kind of expecting here. So I think right now S&P's not pricing in a big move, and we may not get a big move. We may see intraday volatility. We may get some intraday volatility, but we may, at the end of the day, end up right where we are. So, and Jerome Powell walks into your house with a microphone. That'd be an adventure. All right. So there we go. That's just know where we are. All right. Let's go dive in and look at some charts now. And I don't know what the screen just did over there. That was crazy. All right. Yes. Let's zoom down to the 30-minute chart. And this right here, this pop. I have to go down even further. Gotta look at a 15-minute. There it is. This right here, this correction, it happened very quickly. Doesn't show up on the 30-minute. This correction, in fact, let's go to 5-minute. Kind of. So right here, this correction was a running flat. Is what that's called in Elliott wave speak. Right here, that right there. We made a swift, fast move down. We made a swift, fast move up. Made a lower high. Made a higher low in a 3-wave fashion, with that being a drawn out process, and then we broke out above the initial high. That's a running flat, and that is a rather bullish pattern actually in the micro time frames right there. So where does that leave us? I kind of speculated last night that we may see a rally into that 2 p.m. announcement. Kind of drew it on the chart last night. Then we may see a rally, a swift pullback, and then a pop. And that pop could, take us on out for the next several days. This is looking like what we might see. I'm not totally sure. That's just speculating what kind of price action we might get. And it kind of matches what we saw right there, where I zoomed in a minute ago, right there. Run up, swift retrace, and a recovery right there. It could park the rest of the day. We'll see what happens. All right. See what happens. It's kind of interesting setup. I thought the charts were telling us we're going to do the bearish thing, but right now looks like we may do a bullish thing, reject the move down. I've been talking about it for a while, that the chart kind of was saying it wanted to hit the daily roadmap line, but right now that's a measured bounce for going higher, where we ended up closing yesterday right there. That closed yesterday puts us in the vicinity for a measured bounce. That 3-wave move could have been done, and we can launch out of here. Puts the potential right up here, getting close to new highs on the S&P. When we zoom it out, I went back to a little more of a neutral position yesterday. I was kind of trying to go bearish, but in the face of the information that the market presented me yesterday, it really is kind of a coin flip. We can see the market break up. We can see the market break down. Nothing's guaranteed. I went more neutral in the short term. In the long term, I think we're headed up here, 4,800. if not 53. Now, the question is, do we do a further decline first, or do we just launch out of here? There's the market open. So, time's going to tell. 2 p.m., that kind of sets the stage. How do we react at 2 p.m.? That's how we're going to know. Now, we may see a consolidation for part of the day and a pop and then a drop. The pop could come at the FOMC. We could get a pop up and then a drop and then a launch out. So there's a lot of variability potentially possible in the charts today. NASDAQ, kind of on the same path. I mean, that if I hid the ticker, that chart and that chart look a lot the same. Price-wise, not, but the move looks a lot the same. And that was a 5-wave up, a 3-wave retrace, and now we're working on the next move. This can be quite bullish coming out of here. Very much cautious. Very, very much. Now, Russell. Interesting situation here. Retracing. If we hold that neckline, and end up going down lower again, that's like confirming that this head and shoulder is going to play out. If we actually break back up and head toward the roadmap line on the Russell futures, RTY1 exclamation point, that's IWM for the ETF. If we rally back up here to the 1870 area, this pattern is probably voided out. Probably not going to do that. Right now, it still looks good. That classic move is we retest it and then we plummet out. All right. One of those that's kind of working the other way, FNGU. If we break out through that one, could rally right up here to 250. If it fails, we kind of had a little attempt at breaking out before, and I extended this on over. If it fails, we could see a move down here, like 130. Oil, starting the retrace. I thought we would see that after we got to the target area. I kind of expect it to come back to the roadmap line. Down here, that's the next target. Right down in here. Wherever it is, we hit it. I am long UCO puts. Not a lot, just a dot. Not a lot, just a dot. And right here, gold needs to break above this trend line. For reject and head back down again, that just keeps on going in the triangle, keeps perpetuating the triangle. Bitcoin having trouble breaking above, staying above the roadmap line and this resistance that we formed by spiking up and dropping back out. Got to get above that stuff. And then we'll have to clear this resistance right up here to get continuation higher. It makes sense. You know, you got to clear resistance above us to go higher, right? I mean, it's like, duh, saying the obvious, but it's not necessarily obvious and clear to everybody where those resistance points are. For a lot of years, it wasn't clear to me. Once I start drawing them on the chart, it's like, duh, it's right there. But right there, around 29,365, got to be above that. So back in the 30,000s. That's what we really need to get continuation higher on Bitcoin. Anything lower than that is going to be a slog, more than likely, going higher. Ethereum doesn't have that kind of pattern. We're sitting down here consolidating, and we may see a spike lower before we can flush this out finally. I thought this was the flush we needed. We've been unable to break out of the consolidation. That may need one more flush. Dollar just kind of churning right here, waiting for the FOMC. Looks like we may do another back test of the box. We hold that. This is still the higher probability path at this point. Just to keep chugging right up in there. Maybe late this year before we get up there. Could be November, maybe December before we get up in that area. Find resistance. ILMN was getting a little pop pre-market, make it a little doji. But when we zoom out, that chart looks like a flaming garbage piece of crap right there. I mean, how low can she go? I don't care what the company does. It is biotech, though. Biotech's extremely dangerous. So be careful on that one. BJDX, again, medical specialty, biotech stuff. Doesn't follow the patterns, but that is a dumpster fire of a chart. The Fed keeping interest rates high is basically zombie killing. All right. All these companies that are sitting here operating with massive losses over and over, reverse splits, those are zombie companies. They're barely hanging in there to cover their debt. Many of them have to borrow more money just to stay in business and pay the bills. And when money's getting expensive, watch out. I mean, that's one reason why I'm so adamant that Carvana is a bad business. I mean, they keep ramping up their money, more and more money, more and more revenue, and losing more and more money. You got to turn this boat around. You can't keep losing more money on more revenue. And it's not like, oh, we just sell more shit and stuff, and all of a sudden we'll start making money. No, you're not proving that's working. Yeah, you move more revenue and you lose more money. Be careful on zombie companies. All right. When there's no S, I mean, you can't fake the sales. At least Carvana's got some sales. Other stuff we've looked at recently had no sales. Like ILMN here. Do they even have sales? Well, they got some, but they lose a crap ton of money. BJDX, do they even have any sales? No. No sales. Why do you want to invest in something that has no sales? Yikes. Like 3,000% loss. Of course, when you make no money, infinite loss. BSX, another medical distribution. And we need to redo the fib lines. Borderline whether this is in the biotech. But 56, 57, this is behaving more like a regular old stock. And we'd expect a pop on up, hit 56, retrace back to the 100, and then get 57 if it's going to go, or retrace back to the roadmap line again. Doesn't look like it goes on big runs each time necessarily. Looks like it may take 2 attempts before we get the bigger run. Western Digital, potentially working on a breakout here. But we do have, when we zoom out, we do have the bigger kind of downtrend that we need to break through to see higher prices. This is kind of volatile and gnarly. Look at those big swings up and down. ABT, Western Digital definitely isn't participating like the rest of the market here. I mean, everything else has kind of been up for 2023. This one just kind of sideways, barely getting back where it was before we started the big drop back here. In fact, it's been declining for a good long time. We zoom out. We've been on a decline in Western Digital since back here in 2014. So this is not like a new thing. Can you make money on these swings? Sure. Is it heading toward a descending triangle going toward 25? Yeah, kind of is. Spot. There's Spot kicking off an alert. Let's see what we got. Looks like we're breaking my conservative entry target, or entry point. Conservative entry right here. Looking for a move on up. 195, possibly 213. Beautiful. That's watch out for a reversal, but that's kind of saying look for a position right there. ABT. Not really doing much. Another medical specialty. AZN, another medical, pharmaceutical, biotech related. Probably going to come down here. says something when basically only medical crap is on the watch list today. I mean, it says something to me. EXAI just chopping sideways. Pins, nice pop, but just chopping sideways. We gotta get above and stay above. It rejected that right there. Now that creates a zone where we need to get above to get continuation higher. Toyota Motors retracing a little bit of that pop, but probably on the path up to this next resistance, which is the all-time high. You know, who stands to benefit from the UAW screwing American car manufacturers? Tesla, Toyota, Honda, Kia. And it looks like Toyota rocking it out here. SPRY, another pharmaceutical. That's an ouch. This is why I warn about these. You just be rocking along. All of a sudden, you're like, holy F, what just happened? And FDA declines to approve epinephrine. So, rock along, your drug gets denied, and then what? You go bankrupt. Especially when you got no sales. All right. Apple fritters. Yeah, apple fritters, like you take pie dough, you put like apple pie filling in there, seal it up, deep fry that sucker. That's a apple fritter. That's one kind. Another kind is like make pancakes with apples in them. That's another kind that's popular here in the South. They call them apple fritters. So, if you didn't know that. Dollar General, complete dumpster fire of a chart. Broke below the resistance, the next line in the sand down here around 100. And not looking too good for Dollar General. Probably going lower. Their business is fine, but the chart, pretty much a hot dumpster fire. Now, you're like, $100 is a steal. Don't buy a falling knife. It can go to 50. I mean, it could. All right. And then you need 100% recovery just to get your money back at 100. Wait for it to find a bottom and build a reversal. There'd be plenty of upside if it's going to go higher again. Don't buy falling knives. Cart. This one, I mean, ouch. IPOs are bearish. Remember, 95% of IPOs end up going down. You're 95% below the IPO price. There's the IPO price, and we're down. I mean, ARM also below the IPO. How low do they go? Yeah, they can go down significantly and form a bottom. I mean, even Meta, way back when. I'll have to zoom this out like a lot. Even Meta, way back when. We started out, we popped pretty big, and then we dropped all the way down here. Made a bottom way below the IPO price, and then it was all the way till like 2013. And it took almost a year to get back where we were getting above the IPO price. Be careful trading IPOs. IPOs are bearish. I don't care what anybody says. IPOs are bearish. The market proves it over and over and over. TDOC, that's a SPAC, and looking pretty gnarly. Many of these pop, and then they come right back before the deal gets working. So be careful on that one. I don't trade SPACs. USO, looking like we could get that retrace, but it can also go on up and hit the target zone, though. Yeah, right over there. Target zone. Made the target. I'm not betting on any more upside at this point on oil. You know, could it get some more? Sure. It's not high probability. High probability, I mean, it's not even super high probability to retrace, but it's higher probability than going higher. So, yeah. Then Uber getting a little bit of chop, and that lower high may retrace to the roadmap line. That would be the expectation at this point. Is it high probability? No. I wait for it to get down here, and then I pick my spot on a bounce. That's the way I play. I don't usually trade against the market. The market looks like it's going higher. It could take uber higher. So there you go. Bias for the day. Volatility at the FOMC. And before that, we may just chop around a little bit. So there you go. All right. Hope everybody has a great day. And stay tuned out there. If I decide to throw up a live stream, you want to make sure you're subscribed and hit the alert to know when I go live. I'll throw it in Discord if I do. I'm just not sure if I'm going to do that or not. Just not sure. I don't know. In Discord, you guys can let me know if that's something you want to do. I may do it. Otherwise, have a great day. We'll see you later. Maybe I'll do it on Zoom. I don't know. We'll see. We'll see. It's not really YouTube content. It'd be more like maybe more Zoom content maybe. So make sure you like and share. Yeah, exactly. PD. Hit the thumbs up if I said anything that's beneficial to you today. And I'll see you.